Hello, welcome to Willow Legal Group's Coffee Chat. We are here today with Suzanne Scheer. Suzanne is a financial advisor with the Mecum Group and Raymond James. Suzanne was born in DC and grew up locally here in Rockville. She practiced family law for a while in Northern Virginia and then took a break to raise her son and help her parents during an extended illness. And because her parents had planned well, she was able to oversee their care, and didn't have to provide care directly. But I think that was the entryway, right, into learning about long-term care insurance and really being out there to help people. So, Suzanne, your story is, and the reason you got into this is super fascinating. So let's start there. Share with us why long-term care insurance, and how did you go from going to family law, which I guess I understand why you leave family law, to long-term care insurance. We always say we don't like the drama, right?
We can't do that. We can't handle the drama.
Yeah. So, tell us your story.
Okay, and thank you so much for having me, by the way. It's great to be here. So basically, I just was the typical sandwich generation person. I mean, my son was 15 months old when my mom first started really having health issues. I was only 33. My parents were on the older side when they had me for the time. I mean, now, gosh, they were 35 and 42, which today is probably average. But back then, that was old for having a baby. But in any event, so I was pretty young when my mom started having health issues. And then my dad, a few years later, had a stroke, and then it developed into end-stage dementia. So anyway, so there was just a lot. My mom was mainly at home. My dad was in a nursing home the last 3 years, and thank God he had a long-term care policy because, the expense of his care, my mom couldn't qualify based on her health, so she didn't have a policy. So there'll be a lot of times where she wouldn't have a caregiver because she was afraid of running out of money, which is pretty common. I think women more than men have the concern just generally about running out of money, but especially when you're in the care situation, it can be really tough. So I just, I saw what it was like, and I saw the stress of it, and I realized I can't take away the stress or the emotional difficulty and seeing your parents decline or seeing anyone you love decline or go through difficult times. But if I can help them with a financial piece so that they know at least they've got some of that covered, maybe not every penny, but at least a good amount of that is covered, the peace of mind that provides is just tremendous. And one of the things I really love is that there are newer products now for long-term care insurance that a lot of people don't know about. They're the asset-based plans. So it's a combination between usually a life insurance policy and a long-term care benefit. And if you never need any care, you put money in, but the money goes back to your beneficiary if you don't use the part that's the insurance. And the other thing that I really love about those policies is that whether you pay it all at once or over time, their premiums are guaranteed. So that there won't ever be an increase.
Oh, wow.
And to me, that's really big. I love helping people with things that are guaranteed, because, investing is really important. I don't say that it's not, but I don't love being the person picking investments and dealing with that part of the planning because the volatility kind of doesn't make my stomach feel so good. But if I can get somebody a long-term care policy where the premium is either they pay one time or they pay over time, but they know it can't increase, and they know it's going to be there for them. That's just a joy for me because there aren't going to be surprises and it's going to be there for them. So that's a really big thing for me.
That's awesome. Who should start? When should your average person start thinking about long-term care and making sure they're covered in the future?
I would say early to mid 40s is a good time to look. And it used to be that people would wait longer because the traditional policies that were around forever were just pure insurance, and it was just a use it or lose it type policy where you pay in, and until you go and claim or pass away, you just keep paying, kind of like your car insurance or your homeowner's insurance. And so people would hesitate to get it too young because they knew they were going to have to pay forever, so they would wait longer, which isn't really necessarily the best thing to do, but that's just sort of what happened in practice. But now, either with the standalone policies like that or the asset-based, there really is a benefit. You can get a lot lower premium by doing it younger. So it's a juggling act because if you've got young kids or kids going through college and you're trying to pay for that, pay for living in this area, which is so expensive, and then all the other things, it's not always easy. But there are different options depending on where you are. Like if somebody's in the throes of having a lot of expenses, you could start off with a traditional or standalone policy that isn't as much money out of pocket to put something in place to protect you. And the premium wouldn't be very high if you do it young enough.
Mm-hmm.
And then maybe when your kids are done with school and you have a little bit more money available, you could stack on a policy that's an asset-based policy, or you could even use that and replace your traditional policy. So I would say starting to think about it at 40, and then as you progress through the 40s, looking into it, seeing what the options are, seeing what fits in with what your situation is really important. I mean, because the big thing is you have to be able to qualify for coverage. So your health has to be good enough to be able to get a policy. So people think, oh, I'll just deal with this later. Well, God forbid you get in a bad car accident, you have a bad injury, or you get a diagnosis of some kind. It might not necessarily be a life-altering diagnosis, but for example, something like lupus or other autoimmune disorders, that is often a reason that people can't get coverage. So, the odds of getting diagnosed with something go up the older you get. And so,
yeah,
at least at a minimum, I would say like around 40 is a good time to start learning about it. Find out, how does this work? And maybe this is a good segue into explain you just kind of the very basics of.
Yeah, that would be perfect. Like, how does it work? Because I think that helps both people who are thinking for themselves or people who are having, they have parents say, well, my parents have this policy.
Right.
How does it work when I'm thinking about working with them?
Right. So a long-term care event is something that's expected to last at least 90 days. So it doesn't apply if you break your leg and you're just out of commission for a month or two. That wouldn't apply. But if it's expected to last more than 90 days, and it would be triggered either by a significant cognitive impairment, or if you can't do 2 out of the 6 activities of daily living. And these are basically the things that we do every day that we don't even think about when we're healthy, knock on wood. Getting out of bed, going to the bathroom, bathing, dressing, eating, which is not cooking, but feeding yourself or remembering to eat, and maintaining continence. So those are the 6 things. If you can't do 2 out of the 6, and it's expected that whatever is causing you to not be able to do the 2 out of the 6 is going to last at least 90 days, and that would trigger a claim if you have a long-term care insurance policy. And one thing that's really important to know also is that the care, all the things I was talking about, none of those things are medical in nature. It's just that you need somebody there to make sure that you get through your day safely. So because they're not medical in nature, Medicare doesn't cover it and health insurance doesn't cover it. And about half of the people in this country, when polled, didn't know that. They thought Medicare covered it. And so it can be a really big shock when someone finds out that, okay, well, either their parent, their spouse, another family member needs some kind of care. And to bring somebody in, it's going to cost, average right now is around $6,200 a month if you got 44 hours a week of care, which isn't even that much if you think about it. If somebody really needs a lot of care, they might even need more than that. But so if you figure the average is somewhere around $6,200, most people don't have an extra $6,200 a month just sitting around available to be used. But if you've got a policy, you've got a dedicated source of funds that's there for you if you need it. And there are all different ways to design a plan based on what someone's situation is. There's some really neat opportunities now. If somebody has inherited an IRA from a parent, because of the Secure Act 2.0, they have to take that money out in 10 years. And if the person they inherited from is already getting RMDs, required minimum distributions, then they have to take the distributions as well. So there's a policy where you can just plop your IRA into one of these policies for long-term care, and then you can create a joint benefit for yourself and your spouse with all the way up to a lifetime benefit potentially. And if you don't need care at all, then there's a death benefit that goes back tax-free to your beneficiaries. So you do pay tax on the money from the IRA 1/10 at a time, one every year for 10 years, you pay as the money comes out. It can satisfy your RMD. But there are all these really great options. And that's what gets me really excited to get into the weeds and plan for people based on what they have and what they're working with. And it could be paying over 10 years. It could be paying over 5 years, 20 years till 95. I mean, there's just these endless options for planning. And I think most people don't know that these options even exist. So it excites me.
That's such a, like that. I'm just thinking about people who we help go through probates, right? That receive, IRAs or portions of IRAs to be able to say, hey, here's an option, because I'm pretty sure that a number of financial planners probably don't bring this up, right? And say, here, you're inheriting this. This is money. Hopefully you don't have budgeted, right? Because you don't ever want to receive an inheritance. It means you've lost a loved one. But to put that money to use in a way that can further help you down the road, that's really great to know about.
There's one thing that's really cool too. Until the end of 2025, the lifetime estate and gift tax exemption for a couple is $24 million roughly, and that might go away at the end of this year. We're not sure. You think it's not going away?
I'm not optimistic. I think it's staying or going up.
Okay. Well, you can take advantage of that. Let's say somebody has some extra money sitting around and they already have their long-term care plan and they want to help their child out or their grandchild. If they have a 30-year-old adult child or grandchild, they can purchase a policy for that child as a gift, and it'll fall, they won't have to pay tax on the money because it falls into that gift tax exemption. I looked at one recently. Let's say you had someone in Maryland, a 30-year-old male. If the parents put in $85,000, then in his 80s, that child would have somewhere in the neighborhood of $5 million for long-term care.
Oh, wow.
Tax-free.
Yeah.
Wow.
So, I mean, imagine, to be able to give your child a gift that's going to be there long after you're gone to help them take care of them if they need them. And if the son never needs it, then there's money to pass on to the next generation.
Mm-hmm.
Oh, wow. That's fascinating.
I get excited about these.
Yeah. Well,
sorry for saying that.
No, that's good. Somebody needs to get excited about this stuff. But so if somebody's interested, like we talk to our clients, obviously, about you need to maybe start thinking about long-term care insurance or how you're going to pay for it. Who do we send them to? Obviously, you are someone that knows a lot about it. Is it financial advisors? Are there separate insurance brokers? Like who do we send people to learn more about this?
My recommendation would be somebody who specializes in long-term care.
Okay.
Because if they're a financial advisor and they dabble in long-term care, they probably don't know all the nuances. Mm-hmm. There are just so many different types of policies now, so many options, so many funding options, so many different plans. And then another really important part is that whoever you're going to talk to, whether it is, insurance agents, might be the specialists or could be advisors. I don't know a lot of financial advisors who specialize like I do. It typically would be like an insurance agent who specializes. But one thing that's really, really, really important is if you're talking to somebody about long-term care insurance, you need to make sure that they ask you in detail about your health. Because if they don't, and then they apply for coverage and you get declined, you either can't get it at all ever, or you might have to wait 2 years, which could be a real problem for someone. And another thing that people don't know about is if someone's in physical therapy and you apply, you're going to get either declined or postponed. So you have to wait until you're cleared from physical therapy. Some companies might even say you have to be 3 months post physical therapy. Okay. But if somebody doesn't do this all the time, they might just say, oh, John Smith, here, let's take XYZ policy that we use for all they wouldn't say this to them, but that they use for all their clients, the same thing. And, try to get everyone to fit into that same cookie cutter policy. Maybe for some people it ends up being okay, but I don't know. I think the idea of going to somebody who specializes and really, is focused on all the different rules and options and changes that come along, new products that come along. So there's also something called short-term care, which I don't do very much, but for folks who can't qualify for long-term care, it could provide as much as 2 years of coverage, and it can be an option too. So there are just, depending on someone's situation, you really have to, find out, ahead of time. What we do is we give the person's information anonymously to the insurance companies. Say, okay, well, would you consider coverage? And it's not a guarantee, but they'll come back and give us a sense. Okay, well, yes or no, or what do we do?
Yeah.
And then it's never perfect, but you maximize the chance that they'll actually get approved.
So well, and Suzanne is amazing and will help folks kind of look at their plans. If you have an existing plan or if your parent has an existing plan, to just help you know where you are, right? And see if there are any gaps that can be filled or need to be filled or what your options are. So that's one of the things that we love about Suzanne is that it's very education oriented, right? Just like you want to get the word out. Suzanne's very similar. So I think we have some questions that we ask everybody. And I think we covered the first one, right? On what inspired you to focus on this part of your career, right? And
I mean, I think I sort of answered, but I'd say the combination of my personal experience and then really the fact of the plans with the guarantees that really does just sort of speak to me and the need. And I'm in Gen X, so, and people aren't talking about it. And, unfortunately I went through it really young. And then I found myself in this career, doing this. And so I know all about it. And when I was helping my parents with it, I didn't know very much at all about it. And I think most people don't. I mean, you get a policy and then you put it away and it might be 20, 30 years or more before someone even uses it. And some of the time a parent has a policy, the kid doesn't even know they have a policy.
Yeah.
But anyway, so I just at the core of it is helping people. But I just feel like for whatever reason, someone said to me, it got in my head that I was, not that it's all on my shoulders, but just that I want to be one of the people, shouting from the rooftops that this is something that everybody needs to be thinking about. It doesn't mean that it's right for everyone to get insurance. And I certainly never push that if that's not the right thing, but I just want people to know it's how it works. Because when so many people don't even understand that there's a need for this and why they need it. And it's the biggest threat to a well-planned retirement.
Yeah. Yes. I mean, the conversations that we have, right, and I have with people that get the first bill from a nursing home and say, oh my gosh, this is going to be $17,000 a month. Mm-hmm. We can't afford that. Mm-hmm. And so, it's a big one. I don't think people realize what the cost of nursing home care is and that it's not covered by Medicare.
Right. Right.
So if there was one piece of advice you could give to folks about long-term care insurance, or one thing you really wish that people understood, what would that be?
Well, I love letting people know that if you've been declined before, or if you looked at long-term care insurance before there were all these newer options available, it's worth another look just to see, maybe it wasn't right for you when you looked before, but maybe the timing's different for you financially, or maybe there's some options available that weren't there before. And just ask the question. I don't charge anything for people to call me. I'm more than happy to talk to people and just find out what their situation is. And if I don't think it's a good fit, I'll definitely, let them know that. But I just think people should just find out about it if they don't have it, because so few people have it, and I wish they did when they're in a bad situation. Mm-hmm. So
last question. What is the one item you can't live without in your day-to-day life?
I would have to say, well, can I do two?
Sure.
I'd have to say my phone and then a fan, because I tend to get warm some of the time. Because of my age.
Good reason.
So I always have a fan nearby. So.
All right. Well, thank you so much for joining us. This has been great. And we'll drop Suzanne's contact information in the post so you can find her and reach out to her if you have any other questions, or if you have a policy or your parents have a policy that you want to have. Suzanne can help you look at and say, what is this? So,
yes.
All right. Well, thank you, Suzanne.
Thank you so much for having me. It was great to spend time with you, Beth. Take care.